Good morning. Welcome to Stock Market Today. It's Tuesday, October 27th, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. I also give you daily stock ideas, or we give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So market sharply lower on Monday, though ended off the worst levels of the session. All sectors down on the day, with the reopening theme names leading the decline. Treasuries were bid, with the curve flattening after seeing a big backup in yields last week, highest since August. Dollar was stronger on the major crosses, so a bit of a flight to safety going on there. Gold up fractionally, WTI crude down 3%. Your outperformers, utilities, healthcare, and REITs. Your underperformers, energy, industrials, and materials. As we get to the desk this morning, futures are up about 0.5% after Asian markets were mostly weaker overnight, while European markets are mostly lower as well. Treasuries are a little changed. The dollar is weaker against the yen, little changed against the euro. Gold is down 20 basis points. WTI crude getting a bit of a rebound, up 1.1% after that big decline yesterday, down over 3%. That's the framework as we get into it this morning, where we are testing the upper ranges of support zones. All right, remember, support and resistance, they're levels of interest. Oftentimes they're zones, right? So when we say 340, we're looking at 340 and we're saying, okay, what does this look like? And so here's what we've been saying: SPY 340, then 320. That's your zone. September highs are resistance. By our work, SPY, IWM, and Qs are now all oversold. Realistically, this is what we've been waiting for. For those of you who read our notes every day, and if you don't, you should take the trial. We've been waiting for oversold conditions at support. We have them. Yes, I'm aware there's an election. Yes, I'm aware that there's COVID. We have oversold conditions at support. We're identifying leading areas of the market and looking for opportunities to add exposure. All at once? No, that would be silly. Selectively adding exposure, I think, makes a ton of sense right now. Ton of sense. Because your risks are clearly defined. SPY breaks 320, you have lower highs and lower lows, downtrend. Qs break 260, lower highs, lower lows, downtrend. IWM breaks 140, 145, you are still in the downtrend. That's it. You've defined your risk. The setup is there to begin to look for opportunities, and that's how I'm framing it. Nobody has a crystal ball. We don't know what's going to happen. We can sit here and do nothing because we're worried about the election, or because we're worried about COVID, or we can have a process, identify oversold conditions at support, define our risk, and look for setups. That's what we're choosing to do. Taking a look at our market in a minute now. What are we writing about in the note to Chaikin clients? Well, COVID cases and software earnings. SAP's earnings weighed on software yesterday. It was a mess, and I'm actually using that as an opportunity to look for compelling ideas within software. Tech's relative trend is being put to the test. I think that's important. It's also a huge week for earnings. If Staples joined the Utes, we'd be more concerned. Remember, we've been talking about utilities and their relative strength for a couple weeks now. Traditionally defensive group. If I saw Staples join the party, I'd be more concerned. And they might. And if they did, I'd get more concerned. But right now they haven't. Comm services, big week ahead. Futures point to a higher open here today. Taking a look at the power bars now, no doubt about it. Deterioration yesterday. Dow down 2.2%. 2 bulls, 8 bears there. S&P 500 down 1.8%. Some of these were down over 3% yesterday. The Dow was down over 3% at one point yesterday. S&P, nice snapback, was down much more intraday. 123 to 103 bulls to bears there. NASDAQ, same thing. NASDAQ was pretty much an outperformer for the bulk of the day. Down 1.5%, 1918 bulls to bears. Small caps in slight underperformer relative to the SPYs. 725, 269 bulls to bears. Flight to safety sends bonds higher, yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Let's hit our stocks of the day. All right, so here's the deal. SAP, big name in the software space, global, right? Touches a lot of areas of the economy, but here's where they're really leveraged, and they have a big exposure to travel and entertainment. Remember the company Concur? For those of you who have ever done expense reports, you've probably used Concur. SAP bought them. It was about 5% of their revenue in the first half of 2020. And because of their exposure to that area of the end markets as well as others, they took down their guidance and kind of reined in their longer term targets. And the software group got smashed. And it seemed a bit like baby with the bathwater to me. So I wanted to screen the software industry for stocks that are neutral or better in our model, neutral or better. Okay, I'm okay looking at neutral stocks as long as the relative strength is strong, which I'm screening for. And I'm also looking for names where they are currently oversold, i.e. they are set up in the near term, now or in the near term. Right, here's what the list looks like. There are 19 names on it. Intuit was a name that I've highlighted recently. Synopsys and Cadence, software companies that cater to the semiconductor space. SPS Commerce, you should dig in and know this name. Retail, software for the retail space, right? You know, we all know what the shifts that are playing out in retail, the groups and the stocks and the companies that are transitioning online are winning. SPS Commerce helps them do that. Take a look at SPS Commerce if you don't know it. All right. Obviously, Salesforce, a bellwether. SolarWinds, right? SolarWinds is a holding in Hack, the cybersecurity ETF. All right. Regardless of what SAP has to say about enterprise, if companies are cutting back, I find it hard to believe that they're going to cut back in cybersecurity with everybody working from home. Think it through. I think there's opportunities here. You just have to do a little bit of legwork. I gave you a starting point with this screen here today. Sector tracker now, moving to the last 5 days. Utilities, top of the list. We've talked about it. Comms, big week ahead. We are going to hear from Facebook and we are going to hear from Google. And I think that's going to set this tone. Financials are intriguing. We'll look a little bit later. The regional banks have my interest peaked. Interest peaked does not equal bullish. Healthcare, a little bit of a rebound here on a relative basis. Everything else is lower, with tech at the bottom of the stack. And we're going to look at tech because we are at an inflection point in the near term for technology on a relative basis. Industrials, materials, our two favorite cyclical areas. Choppy in the early uptrend. There's no two ways about it. We like them, right? If you had to choose between materials and industrials or financials and energy, we've made the right choice in the cyclical space. It is a choppy start. And there's the staples. They're down over the last 5 days. If they were up with the utilities over the last 5 days, I'd be more concerned about the market. I really would be. That would be two solidly defensive groups outperforming. That's a message. I think that utilities in the near term is a little bit more nuanced than that. Our industry in focus, aerospace and defense, which is flat over the past 6 months. Weak power bar, 7 bears, 3 bulls, currently ranked number 17 of 21 subsectors, having moved down 3 slots over the past week. Teledyne, Hexcel, and Boeing are bearish, and bearish respectively. Here within the model at Chaikin Analytics, those are names we want to avoid, while being mindful of the fact that this is a group that's in play on the election, right? This is aerospace and defense is a group that's likely to do better should President Trump retain the White House. The ETF itself, XAR, a neutral rating. We're calling the trend strong because it's above the trend line, but for all intents and purposes, that's a flat trend. Money flow bearish, closer to oversold, massive underperformer, except for a quick hit towards the end of 2019. This group has not been outperforming the market for the most part over the past 12 months, right? Hard to get excited here. Nothing here intrigues me in the least. Wake me up at $100 on XAR and maybe I'll start taking a look at some of the stocks within the group. For the most part, I am completely uninterested. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Abiomed, no real news there. Stock higher, 2.5%. AEP, they are buying a business. That stock higher by nearly 2%. Dexcom, no news yesterday. They are out with earnings though ahead of the market open here earnings last night, rather, after the market closed last night. I apologize. I'm having a hard time reading my own notes. Nothing company specific, up 1.4%. Etsy reports tomorrow. That stock was higher by 1.37% yesterday. Let's look at the loser side of the board. Big theme on the loser side of the board. Opening trades, uptick in COVID. We're hearing about restrictions in areas like Italy and France. We've heard about them in the United Kingdom. Some trepidation, some fear that we're going to have some further restrictions here in the U.S. The opening trades or the reopening trades got hit hard yesterday. Royal Caribbean down 9.6. Carnival and Norwegian down 8.5%, right? Hit hard. Hasbro, company specific there is an earnings announcement. That stock down 9.35%. Toy stocks have just, I don't know, probably secular decline, right? I mean, kids, my kids like Legos, to be perfectly honest. But with it's going online. So Hasbro and Mattel, these companies, risk being secular decline. APA, nothing company specific, down 7.75%. Let's dive into the charts. Here's what I'm talking about when I say tech is at an inflection point. Top panel is the one we're paying attention to because it's relative strength day here at Chaikin Analytics. We look at all the sectors on a relative basis and get a sense for what are the trends and where could they be changing. And where they could be changing is what's important, right? Anybody can look at the chart and say, hey, that's going up. Where are they changing? Where is their opportunity? Where is their threat? Right now, I think the threat is in tech in the near term, right? Long-term secular trends still up. Look at the 200-day moving average, right? Rising, and we're well above it. Maybe this is just a situation of we got a little extended and we're continuing to chop around. We're continuing to chop around. However, we're on the verge of potentially falling out of that consolidation. RSI moving towards bearish ranges. Take a look at tech on an absolute basis at the bottom of the chart. Chopping, right? Potential double top in play. Break of 110 would confirm it. So we're watching closely for what's going on within the tech stack. This week could go a long way. We're going to hear from Apple. We're going to hear from Microsoft. So we're going to want to pay attention closely to what those companies have to say, right? Because, they're bellwethers within the space. They are bellwethers within the space, and we have to be mindful of what they're saying. So we're going to watch tech closely here as the week progresses. We are, for all intents and purposes, at an inflection point. Now, Utes Staples, right? Here's the one we've been talking about. Look at that pop in utilities on an absolute basis, on a relative basis. Big rally. In September, right? Much as tech topped, right? Much as when tech topped and the growth theme topped, we've seen utilities rally. I think money is rotating, number one, out of treasuries, number two, out of the mega cap tech theme and into some of the yield plays here. In particular, utilities, right? You take the 10-year yield is yielding about 85 basis points, XLU yielding about 3%. Now, from a purely defensive messaging market, message to the market, if Staples, which I give you at the bottom, were exhibiting a similar activity, I'd be really concerned. Actually, I'd be, probably be turning bearish on the market, but not there yet. But something we're going to pay close attention to, very close attention to. But I just wanted to kind of flag that for you. It's been getting some traction. We're watching it, right? There's no two ways. We have to watch it, but we have the roadmap. Go back to earlier in the show when we gave you the roadmap on the levels, and I'm slightly intrigued. XLF, maybe some signs as a base as we see KRE, the regional banks, rounding higher and taking out their 200-day moving average, right? It's early days, slightly intrigued, does not equal bullish, right? The takeaway is not, I listened to Dan and he's bullish on financials. That's not the case. I'm slightly intrigued at a potential change of trend. Take a look at that. That's it for today. Take us for a test drive. Take that 14-day trial. Read my note every day. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.